Every year on April 15th, something interesting happens. Half the country is stressed out, scrambling, dreading whatever number shows up on their screen. And then there's homeowners. They're not as stressed, they're just fine. Maybe even a little relieved. And if you've ever wondered why, that's exactly what this video is about. Hey guys, I'm John Rozek. I work with buyers and sellers in the Milwaukee and surrounding areas. I do these videos every week to give people straight, honest information about real estate. No fluff, just the stuff that actually helps you. So today we're talking about the financial advantages of owning a home that most renters don't even know exist. And by the end of this, you're either going to feel really good about owning or really motivated to start. Let's walk through this together. Let's start with the big one, the mortgage interest deduction. When you own a home and have a mortgage, the interest you pay on that loan is in most cases tax deductible. Here's why that actually matters. In the early years of a mortgage, most of your payment is on interest. On a $400,000 home here in the Milwaukee area, you could be paying close to $20,000 in interest in year one. Homeowners write that off. Now here's the part that should make every renter pause for a second. Your landlord has a mortgage, and the interest on their loan, deductible. On their taxes, paid for, at least in part, by your rent check every month. You are literally funding someone else's tax break. Not trying to be dramatic about it. That's just how it works. Always talk to your CPA about your specific situation, but the concept is simple. Owning creates deductions, renting doesn't. Next up, property taxes. I know, nobody's favorite topic, but stick with me. Homeowners pay property taxes, and in many cases, those property taxes are also deductible on your federal return. So you're paying them and getting a potential write-off for them. Now here's the part most renters never thought about. You pay property taxes too. You just don't see it. Your landlord's property tax bill is built right into your rent. Every month, you're covering it, and you get zero deduction for it. Owners have options on tax day. Renters are just paying. Okay, this is my favorite one. And honestly, when I sit down with buyers and walk through this, it's usually the moment where everything clicks. The capital gains exclusion. If you sell your primary home and you've lived in it at least 2 of the last 5 years, you can exclude up to $250,000 in profit from capital gains taxes if you're single, up to $500,000 if you're married. Listen to that again, $500,000 tax-free. I had a couple here in the Milwaukee area, bought their home about 8 years ago, sold it last year, walked away with over $200,000 in profit, tax-free. Use it to buy their next home and barely touch their savings. They weren't lucky, they just owned a home for 8 years. That's it. And there's no renter's version of this. It doesn't exist. There's no, well, you've been renting here long enough, here's your check. You just keep paying rent and your landlord keeps building wealth. Every year you're renting, that opportunity is sitting right there on the table, waiting, and it's not being used. Last one, and this one's not even a tax advantage technically, but it's connected to everything we just talked about. Equity. Every mortgage payment you make builds ownership in something that's yours. It grows, it compounds, and eventually it becomes a down payment, a retirement cushion, or something you pass down to your kids. Your rent check, it's gone the second you send it. I talk to people all the time who've been renting for 5, 6, 7 years, and when we actually sit down and look at what they've paid versus what they could have built, it's a tough moment. Not because I'm trying to make them feel bad, but because the math is just honest. So, going back to where we started, why are homeowners a little more relaxed on tax day? Because they built something. Deductions, equity, a capital gains exclusion that most people don't even know exists. Year after year, quietly, consistently, their home is working for them. And I'm not saying renting is always the wrong move. Sometimes the timing isn't right and it just makes total sense. I get it. But if you've been on the fence, if maybe next year has turned into 3 or 4 next years, I just ask you this. How many tax days do you want to spend on the wrong side of this? If you're ready to have a real conversation, no pressure, just an honest look at what buying could look like for you right now, reach out. My information is in the description. Happy Tax Day, folks. And remember, whatever move you make next, make sure it's a smart one. See you next week.